the best trades of the week. I'm making some notes here. You thesis prediction. Fidelity down. Anybody trading with Fidelity can confirm or deny. I don't have a Fidelity account, so I can't check for you. Can look at down detector. See. I don't see any reports on it. Actually, there is a little bit of a spike right now. Fidelity. I'm looking to see if MU can get the -1 ATR. That's like the idea today. I was going to just hold the 1,000 put the whole day, but then I decided to not do that. It makes more sense to secure the gain and then roll, so we guarantee the profit and close out the week strong. Didn't have a losing trade this week. Just a good recovery from the couple losses on MU last week, back to back. Bit tougher, so really nice comeback. Told you we would come back strong into this week. And we did. Sorry, I'm still getting some things set up here, but we'll do some review in a little while. Discord 64. You guys have questions, drop them in the chat. If I miss something on social media, then hopefully, well, no one else is in here but me. I'll tell the group. See any questions? Can we catch a spread today? What's the positioning look like? I'm a little late to the desk. How are things looking? J Money was on here and then he just abandoned me. Let me see if he's come back. I know he couldn't hear me, so. Let's see what gamma. Okay, so we're testing a peak right now and some positive gamma support drum. This is it's actually a pretty good setup for a put spread. The only thing is that 7,400 below could drop into that, but this is a supportive environment. that we're falling into here. Decently thin and trending lower. So let's see. Let me look at the spreads real quick. About midway through the session here. Might try put spread real quick. Well, give me 1 sec. We could trade against that. 74.40 has a pull to it, but if we hold 55, it could be like really good timing. So let's do this here. See 74. I'd like to be around that 45, 40 spot. Let's see, 55 holds. Plus 135. Guys, I'm taking a 45-40 put spread here. I'm going to trade against this peak. If we fail there, then we're going to likely drop into the 40-35 area. But this is actually like quite good timing if this holds. So don't like directionals as much. Futures may be okay for a scalp. I would be careful with the premiums just because of the suppressed environment above. It's usually a little bit more grindy even if we hold. So you might not get much out of the premium. If you're trading premium straight up like that, stay close to the money. Like 70 calls, 65 calls, something like that. But I like the idea of spreads better. So see if we can capture a little bit of premium here. Got trading chat. Accelerator chat. With so many chats. You guys have a good week or a tough week? I'm getting mixed feedback from different people. Are we green? Are we red on the week? Let's see if we can get a pulse on where everybody's at. Great week. Let me just drop a message into the thing.
Hello.
Hey.
Just listening in.
Cool. Yeah, I'm just getting organized here.
Cool.
I'm trying to get a pulse on people are green or red this week. I'm getting some mixed feedback from people, so I'm just curious. See what the vote is. What's MU doing? Ah, there we go. Those 950 puts looking good. We're green. See if we can get into ATR, and then we'll look to. We can take profit into the flush, but those 950s get in the money pretty quick here. So this 50 spot is breaking. We have a very quick pull into 40. That positioning is pretty large at 40, like I was talking about. So I have to manage that put spread idea. Everything's very supportable of us. So even if we just chop around a bit, it might, you know, come down to how the price action settles, and if that position changes at all. Give it a little time. Okay. Let's see this. Yeah. All right, we've got about 30 votes so far. 17 green, 18 green. It's about 50. It's more than 50%. There's definitely more green than red, but it's a decent amount of red out there. Let's see what the X pool looks like. All right. What does this do? All right, guys, this is a heck of a week. For those that joined the open house and are new, thanks for joining. It's a really good week of selection, I would say, from the group all around. This is not the easiest week to trade. It's lower volume. It does favor the upside, but we played the upside and the downside really well. This was a week to go into the weekend happy about. The market's still open though, so don't be dumb. Don't force things that aren't there. Make sure that if you're taking any trades, it deserves your capital. Don't risk anything that is going to mess up your week. And if you're down on the week, don't force something to try to make up for it. As for some key themes, so if you guys have questions, chart requests, any of that, drop it in the chat. I'll keep an eye on it and I'll make a list and we'll do that at the end. There are some good trades to talk about and review. Some that are closer to what I did this week, and then some other trades I think other guys in the group did well at trading that we can talk about. So if there's a certain trade that happened this week that you guys are like, want to know more about what the trader that alerted it was seeing, also put that in the chat. There's questions, anything like that. It's going to be fairly loose review. I'm going to be hanging out here for probably at least an hour and a half or so, or maybe longer, so we don't have to rush through it. But yeah, so let's just hang out and close out the week together and head into the holiday. Let me just get this set up over here real quick. this? Community. I'm gonna put the Discord over here so admins don't freak out that I'm sharing the screen. All right. MU. So for me going into this week, there was a theme. Is it kind of took a bit to play out, but it ended up playing it really nicely. There's a couple of lessons in it that are important to take away as a trader that I'll do my best to kind of articulate. And largely it has to do with what is a real trade. Because as a trader, everything that I talk through is in the context of a trader. Some things don't necessarily apply in the same way as like an investor or swing trader and all of that. But a trade to me is something that has a thesis, a signal, and then execution, defined execution. So like a trade comprises of those three things. We talked about that a little bit more last week in depth. There's a video on it. And the reason I bring that up is because even as a trader, you can have the right thesis and still lose money if your signal or execution is lacking, right? And that's really important mentally to distinguish because, and I went through this recently. I'll give the example. I had this thesis building around memory, in particular on how we could see some quarter end rotation. There's a lot of room for memory to sell before it even begin to be concerning in terms of the bigger, broader thesis and the cycle that it's in. But I was just looking at this as as we get to quarter end, quarter beginning, there's often a lot of rotation that happens, and I was a little early on the thesis in the way of looking for rotation out of memory and into some other areas. So we spotted this pretty early on, and it ended up playing out. The point that I would make is last week I had two A size trades, which for me to take an A grade setup as you all that know me well, it's not super common. And I had two back to back that failed. It was pretty frustrating. You can kind of see on the daily chart where this happened. This day and this day, we had just kind of wild reversals and kind of strange price action in a lot of ways. So, and then it ended up playing out, and that mentally can be kind of frustrating as a trader. But I reviewed this in more depth in the accelerator program. But one thing that I would call out is how to review a trade. So it's important when you review a trade to be as objective as possible, and this is much easier to do when you have a playbook that's defined. If you have a defined playbook and you're operating as a trader consistently, this is an easier task because if you're just flying by the seat of your pants, it's a little bit harder to be objective, and it's much easier to be more in hindsight in the way that you operate. So with this, I was trying to short MU. So like this day on Thursday, you had a real crack, and this is where the thesis started to build some confidence for me. So first time we had seen some like pretty good selling, especially off the open. So like there's a lot of volume here, and a lot of participation from the big guys. It was a pretty nice crack, and then we just floated higher, right? And then the next day, I was looking for that continuation lower, and with that thesis, the one thing that stood out was, let me go to a 5 minute here. We had a lower volume, and a very key level here. And so I saw this trap higher like 4 or 5 times, and it gave me confidence to increase my position for shorts downside. But this was not a super strong signal. So you actually have an active failed breakdown at this 1136 level and that prior day low from the pre-market, and also -1 ETR was here. So to objectively review this, taking the trade is one thing, seeing confidence in the rejections as a signal is objectively okay. But to get a level size when there's clear variables, when I can objectively look at it and say, well, we held -1, there's an active failed breakdown. These things are checks out of favor, and when you have checks out of favor, it doesn't mean that you can't take a trade if there's still a valid signal, like these rejections and turn lower through the key level. But sizing up is not a great idea. And so this ended up getting sprayed higher, and could have cut sooner, didn't cut. I sized properly, so that was fine. but cutting sooner on the break would have made more sense, right? One of the reason I'm talking through that is because sometimes it's really common as a trader when you have conviction and a thesis to kind of like hold on to a trade with a little bit too much bias, and it's better to just get out and then revisit it. You need, for a trade to be a trade, it needs to have a signal and then validate your thesis, and so it can really help save you a lot if you have an idea, but the next step is, okay, well, what's the signal? You have to structure a trade around the idea and follow it, because otherwise your risk management can get out of sorts. So anyways, this ended up cracking the next day, another V-shaped recovery. And so you're seeing some cracks in the armor, so to speak. And then that led into the trade yesterday, which, I had confidence to just hold all day. We finally caught this thing. So the thesis is really just rotation out of memory. And then we needed signal. So the signal yesterday was really straightforward. We had, gap down, some sideways pre-market structure, it broke a key level, flush into the open. This back tested the 1089 level, which gave me confidence that we could trend lower throughout the session. Still a bit lower volume, so I didn't size up, tremendously, but I did build size. On these rejections, once I saw the price action lead and give us signals that validated the idea that this could trend, added some size into it without really increasing my risk too much, because if we sprayed higher, I would have been able to just get out. So this ended up being really nice. We rolled up overnight with a 1,000 put, which was looking really good at the beginning, and then we got this big move higher on NFP. End up not really mattering. So the takeaway here is that, there's the thesis was accurate, and there were some good valid signals to trade. And going into the next week or so, this is where, like, when we look at the big picture on the memory trade, technically we're kind of bending. And what we were trading against was it losing its shorter term moving averages. So, broadly speaking, this is the first time that MU has lost its shorter term moving averages since April. All right, so since then the slope has been very steadily higher. Some checkbacks into the EMAs after getting a little extended, but this is the first time we're starting to see shorter term, near term momentum point down. And that's not, coincidence around the quarter end, quarter beginning, as we saw near the quarter end, which this is a takeaway for next time. If we have this strong of a theme, they'll typically buy up winners and sell losers. So waiting for the quarter to end would have been a better, higher confidence play, and then I would have had more dry powder to probably hit this trade the last couple of days with even more size. So that's something to learn and take away from this. And what I would say on that broader picture on MU is we're still really extended away from the 50-day. We have not seen, check back to the 50-day since April. And with the near-term moving average is pointing lower, I would be careful with the upside unless that were to shift very violently into next week. You see a really big reclaim over 1100 or something, that could change things in a hurry. But for now, if you've been playing this trade, make sure you're taking a step back and looking at the bigger picture here, and staying patient. I think some really good long setups could form if we can pull back into like the 50-day. So let this trade breathe is the bigger picture takeaway. And then as a trader, trade the momentum, trade the signals that set up, and with a little bit of bias to the downside until proven otherwise. So our thesis was rotation out of memory, rotation into some Mag 7 names, which we started to pick up on, and look at what we're seeing. So like PLTR has been fairly dead for a while, and you're getting a bit of a V recovery. Apple, incredible move here on Apple after a big breakdown. Amazon doing pretty good. Netflix, started to sell after the first pop, started to sell right back to the lows. Now look at where we're at. Very quick check back higher. Meta had Catalyst, so it's looking a little dead. Microsoft, really impressive turn. NVIDIA is just not really doing a whole lot. Google digesting a bit, but really nice turn last couple of days. Tesla obviously had a catalyst, so lower today. Let's see what else. AMD is in that risk off kind of rotation trade that we're talking about with chips and memory. So anyway, you get the idea. So the question now becomes, is this going to turn into a theme? We have certain rotational plays that can happen over a course of a day or two, but that doesn't necessarily mean it's a trend or a theme. What I would say is if it turns into a theme, it could be really good for us because there could be some really good swings in these Mag 7 names and some really good momentum plays on the memory trade because these have been just flying super high, lots of momentum. So as a trader, when you're looking to pick stocks to trade, you want to be in what's moving, right? And so, like I mentioned with even MU, is still really extended away from the 50-day. And bigger picture, it's, like you're speaking longer term investors, it's probably still fine, right? And there's probably a really good dip buy coming up. But what do you do until then? Well, there's a lot of profit taking starting to be, forced. You're seeing buyers get under a little bit of stress, even though it stocks up a tremendous amount over this year. So there's a lot of room to move around, and that creates really good opportunity, right? Really good movement. So that was the biggest thing I would say. The biggest takeaway from the week was the rotation out of memory into some Mag 7 names. Hood is another one that has been looking really great since really the start of the month. But a little bit of a pullback here after making a big run. Let's see what this chart looks like. Yeah, this is a huge move in fade. But broadly speaking, another name that has gotten some really good rotation. So Marvell here looks really good. This 252 is a spot I've been watching for a while. I caught MU, so I didn't, feel the need to trade this too. But this is a big move. These were moves that we were kind of all over earlier and just a bit early. It's just a tad early on the logic. The logic was sound, the thesis was sound, but some of the signals were just a bit early, which you know happens. So, anyways, if you guys have any questions about that, I'm gonna take a pause and just look at the chats. And if not, I'll just kind of go through some other stuff. Yeah, so good question from Ozzy about how'd you have the skill and confidence to hold size for so long, with the imagination that this could crack and hold through the P&L swings. So he is privy to the fact that I am also um, swinging shares short from like 11:30 something on MU. So during that trade, I had shorted some shares in the other account, and I'm still holding them. I haven't covered any of them actually. Um, that the confidence from that is, I think, just seeing the thesis become validated. So there's a difference between trading a trade, like a playbook trade, on the lower time frame, right? So like you have stocks that are in play, and then there's the playbook to how to get involved, right? So your stock selection comes from your playbook. As a day trader, that's 95% of what I'm doing every day is seeing like what's in play, what's moving, and then I have a playbook of 5 to 10 plays that I can run at any given point. And that's generally always on 2 5 minute time frame, sometimes longer, like 15 to 30 if it's like a bigger picture trend trade. And so I'm looking for ways to get involved with those stocks on a shorter basis. The same sort of logic applies in narrative trades, and I would say this is an area I'm working on actively. I would say I'm fairly specialized in day trading specifically, but broadly speaking, this is a topic of conversation that's come up in the accelerator quite a bit, where these like basically the swing trade playbook for us. And for me, the biggest trades, as I've observed the market for a long time, the biggest trades are narrative trades that have some sort of narrative behind them. They're not random. They're usually the most active, stocks in the market. And there are times where that narrative is you can apply the same logic technically that we do in the day trading playbook on the higher time frame. And so what I am starting to, put into practice a little bit more and challenge myself is as I'm day trading these bigger themes, one of the consistent things, observations that not just myself, but people in the group have made is a lot of these stocks will end up making consecutive weekly moves or bigger moves for like a while, right? Like, for example, you might have, like this big day one candle on MU, right? And we might trade the opening drive and crush it, make a lot of money, do really well. And then just kind of not do anything or like not really follow it through beyond a day one, day two move. And it's like, well, the stock made, 23% move before like the prior bar, daily bar trailed out. So the question is, how can you stay involved in some way in some of these bigger picture moves that have strong narratives? And for me, um, I'm looking at putting a core position on and day trading around it. So day trading like I normally would, but then if the thesis is still valid and hasn't changed and price hasn't invalidated the logic, the goal would be to keep a core position on until proven otherwise. And so that's why I'm holding shares short for so long, is because I'm, the same reason that I would, you know, on MU hold basically all day, right? In the start of this trade, when I was building size, I was calling out, it's not like I have a crystal ball, but I was calling out that this is now a trend trade and probably just trends and closes on the lows, like just trends all day. And that's what it's going to do. Why do I know that? Well, when you trade the same playbook for thousands of reps, I would hope that I could have some sort of inclination that that can happen. But it's the variables that are at play. So it's the broader picture narrative on the higher time frame playing out on the lower time frame, right? So when the bigger picture thesis aligns with the lower time frame, that's when you can get the confidence to hold that. And it's also pattern recognition. It's seeing the same things play out over and over again. So that principle kind of is the reason why I have the confidence and still do have the confidence to hold the shares short, because I don't really have a reason to sell yet, right? So as long as the thesis stays active, um, for me, shorter term moving average is pointing lower. Larger term moving averages haven't been tested. In fact, we have a 13% gap between the 50-day and where we're at now. So if this were to bar trail, if we were to pop back above like 1000, 1036, then maybe that's a reason to cut. But for now, I'm very curious to see, does this turn into a theme? Is this just a QN, Q beginning, quarter end beginning rotational trade, and then it's done? We just pop back higher and MU recovers the shorter term moving averages and rips to the highs and squeezes? Certainly a possibility, and you better believe I'll be there trading that. But if that's not the case, the risk reward to the downside is really good. So I would like to stay positioned. And the swings in PNL, how do you hold through swings in PNL? Even yesterday, I'm sure a lot of you, and honestly, just calling it out, like I see the chat. Some people are like, when this trade early wasn't working great, people are like upset, like, oh man, the puts are screwed kind of thing. And, I sent that Kobe gif where they like passes on the inbounds where they like chuck the ball in his face and he doesn't flinch. It's like it's not cockiness. It's just I've seen this before, and to me, it's the expectation of the trade, right? When I get in a trade, I have an expectation for what it's going to do before I get into it, and so if that gets invalidated, then you cut your losses, you move on. But the reason I stayed with it is because of what I've seen work before, right? Like the main thesis in the trade, it's pattern recognition and reps. So it's not, like some, magic 8 ball or something like that. It's just pretty simply, I can hold through those P&L swings because I'm sizing properly, right? I'm sized for zero, regardless of if it's A size, B size, whatever. Before you take the trade, you should always be, determining what you're willing to lose first. So once you've determined that, it becomes easy to hold through. It should just be a movie at that point, right? Like you're just watching it play out. So you've got the setup, you determine your risk, you put the trade on, and you're just waiting for the thesis to either play out or not. And I know that may sound like an oversimplification, but that's ultimately what it is. So like the same thing on MU from a bigger picture with the shares. I've seen this trade since I put it on. Basically, I think I put it on this day here. Uh, no, I put it on this day, the Friday. Okay, so around this 11:30 area, I saw this spray higher. and then this swung from, so think about this. This went from basically was up a little bit, sprayed higher 50 points. Then the next day, I got to see the position go up 10%. So over 100 points. It's not like a massive position, it's like 40 shares or something. And completely recover and then spray higher another like 30, 40 points. I held through all that. Why? Well, the thesis hadn't become invalidated yet. So it all comes back to your risk. Like if you're properly set up on your risk and you have a plan, then you're just following it. That's why am nerd out about playbooks and quantifying what you do, because it all ties back to the psychology, right, and human behavior. It's a lot easier to follow a plan if you have a plan, and your risk is structured, than to just be like, oh, this trade looks good and I'm gonna bet XYZ and kind of randomly. That's just not going to get you anywhere. Eventually, the market's going to get you. So. Question from Paulo. What is your process to identify the type of trade? So let's say the big picture aligns. How do you know if you expect more of a trending day or expect momentum at a certain point of the day? It's a great question. And I think MU is actually a good example. If you don't always get it right, but there's certain playbooks for this. So generally speaking, stocks with the biggest catalysts are the most likely to trend all day. Like if the catalyst is strong enough, it's going to make a pretty strong move, because you're pricing in new information, right? So there's a lot that goes into that, because you also have to align the bigger picture with the technicals. If a stock is, say it's basing below all-time highs or something like that, and it's a very in-play name in a strong market, and you get a really strong catalyst at the same time as breaking all-time highs, right? If those stars align, the odds of it trending all day are very high. Now, what I will say is there can be two things can be true at the same time with that, because on a lot of those trades, if the catalyst happens, before the market open, you can have two trades in one. And what I mean by that is you could trade the opening play as a momentum trade and then trade the trend move for the session differently. For example, you could see if I can find an example, but basically you could trail out of like a momentum opening drive play, but keep a core position on and say, I'm just going to trail the EMAs all day or something like that. The best trades are going to have those types of setups, and they'll often set up multiple entries. And even MU is kind of an example of this. Let me put the EMAs on real quick. Let me just make sure that, okay. All right. So this is actually a really good principle for those that get FOMO. If you get FOMO, one thing that I would, and it's really something we can all do better at, is improving your stock selection. The reason being is if you're aligned with the right stocks, they almost always create second entries. This is something I could do better at around the open as well. A lot of times I might have a strong conviction or thesis around the opening play goes against me, or I get stopped out, and then I'll just leave it. Where you have to remember that it's okay to miss certain opening plays, it's okay to miss certain trades, because the best stocks are going to make several entries. MU is actually a really good example of this. I highlighted it not long ago. I think it's let me see if I can pull it up real quick. We use it as an example in the webinar we did recently. Let's see, where is this at? I know it's in here somewhere. Yeah, here we go. So this is, let me pull it on the screen just to kind of prove the point. So this is from our accelerator portal, which if you don't know, we have an accelerator program that you have a fully fledged like portal that you can log your trades, send them to me for review, and all that's really cool. And we log the top ops in here as well for review. So like this trade on MU, right? This was, when was this? June 8th. So a little bit ago. This was one of our, I think the biggest P&L trade of the year, I think for me. It's up there. It's a really good trade. So it's in play. The point that I'm making though is like a stock that's really in play is going to create several opportunities. And on this day specifically created 6, at least for my playbook, 6 quantifiable and repeatable defined entries, right? So if you miss one, if you're someone that gets FOMO and you're like, oh, I missed the opening drive, well, guess what? If it's a stock that's really in play enough that you should be focused on, the odds that it trends all day are going to be really high, and there's going to be another entry. Like for this one, you had a front side rejection, and then you had a break of the pre-market low structure and opening print low structure, right? You have a bit of a back test at -1 ATR and crack. We actually added on that and scalped that to our target at 916. You could have played along. I could have added an entry here. It's not really my playbook, but you got a nice prior bar break here. You could have gone long for a scalp if you're a scalper, right? And then you got price tighten up and turn, off the EMAs, which you can't see here, but they rejected off the EMAs. It's another entry, right? And then you have this key level that was a previous target of daybreak. Boom, that's another entry. And it doesn't necessarily mean that you have to scalp these. These are just different entries for a trend move because the stock is so in play that the odds of a trend are higher. You're just looking at how can you get involved with the stock as it's trending. Then you get another, this is one of my favorite setups, most profitable setups, is when you have a stock that's in play, moving really good on the session, that sets something up intraday, like an intraday setup. So you have a nice tightened wedge that breaks the downside, really simple trade. You know really quickly if it's going to work or not. And then it's sold straight in 864. So the broader point I was making, and I'm talking to myself as well, is when you have conviction in a certain setup, and to your question, like how do you know if it's going to be, what type of trade it is? I'll get more specific with that in a second. But usually the best trades offer kind of both. There's momentum plays and trend plays within each. But the point I'm making here is with anyone that struggles with FOMO, it's actually the bigger point of thing to focus on is, are you trading the right stock? What I mean by that is this concept, you can fix so much of your trading by just trading the right stock on the right day. Stock selection is the most important thing that you can focus on as a trader. It removes so much of the noise, and all the trading's really hard. We have to parse through so many different variables, both mentally and in the price action and all of that. You make life so much easier if you pick the right stocks to trade. So anyway, if you have FOMO and you miss out on one trade, if it is the right stock that day, it's probably going to set up another entry. Now, to get to your question more specifically, I'll give the example of like a breakout trade. So there are momentum sell rules, there are trend sell rules, and move to move sell rules that I follow. And typically, the type of trade is that I'm going to trade is going to be based off of one of those types of setups. So usually, like a breakout trade is going to have momentum sell rules. So we had a trade, I think it was SpaceX earlier this week. I think it was this week that Sarang actually caught. So you have a key level that's defined, and this was an example of like how to identify momentum sell rules, right? So momentum sell rules often align with breakout trades, squeeze trades, um, opening drives. Usually, at least for my playbook, those are momentum sell rules. Um, you typically will see momentum around the open or a very pivotal level. So knowing how to identify a pivotal level is kind of the basis for where you would begin to have that expectation. So was it right here? I think it was. I need to turn extended on because I'm kind of confused on. Let's see. I felt like it was actually. I think it was this day. Yeah. Right? I just want to make sure that I'm not going crazy. Yeah, it was this day. Okay, so I'm pretty sure it's the same concept if it's on, anyways. But you have this 160 level, right? Pretty defined, and then you have a kind of impulse up, rejects just shy of it, and then you have a rejection here, and you even get a reaction here. Now, what I'm doing is, technically speaking, when you're identifying a key level, the number of tests is not the only important factor in deciding whether or not a level or pivot is key. It's actually, I would argue, even more important the reaction that you get from it. And you can think about this really logically, right? If something, if a certain level is tested and gets a very big reaction, and then that happens over the course of multiple times, it's clearly telling you that it's important. And so the expectation that once it finally does clear, you don't need to know when it's going to actually clear because you're just playing odds. But the more time, the more tests there are, and the bigger the reactions there are at a certain spot, the odds that once it finally gets through, and this is relative to to what I was just saying as far as like the number of tests and the measured move off of the level, the size of the move once it finally gets through is generally relative to that. Meaning, if you have these types of reactions, I mean, these are no small reactions. You have, a 5% drop on SpaceX, 8 points. You get a really strong V-shaped recovery and pop into it, and then a pretty strong rejection down almost 2% from that. And then once you finally get through it, you've even kind of battled that area again. So there's 3 tests at that spot, with one of them being a very big rejection. And you can kind of look through history too, right? Like this spot, where the origin of this trade started, is another huge rejection in this area, right? So you can reasonably conclude that once it does clear, the odds of momentum are high, right? So you're building the expectation based off the odds of those things. And then that's where you align your sell rules with that expectation, right? So on the best trades, the ones that work, right? You want to try and have sell rules that are not only capturing the most expected value from the trade, but are also giving you the best risk reward. So like in this example, catching the break of, this level, which you could even argue, okay, say you tried this the first time and you 5 bar trail and you stop out, you wouldn't have stopped out. So it's kind of the point applies. But say you did, you could just get back in and take it a second attempt. So you enter here. 5 bar trail is generally what I look for on momentum trades. And the reason for that's really simple. You're expecting momentum, right? If you get the break, you want it to break and run immediately. Because that is what your expectation is. So that's where you can get the best risk reward bang for your buck. So this didn't really 5 bar trail. Say you're using a 2 bar and you cut it. That's then the point with the risk reward comes into play. It's like even 2 attempts on this is fine. If you would have gotten stopped out, because once it finally, now the odds just increase again. Once it rejects, now okay, this is the point I was making earlier, that you don't need to know when it's going to work. It doesn't matter, because the times that it does work, you could take this trade, and have a 30% win rate. If you're sized properly, the time that it does work is going to more than pay for the times that it doesn't. So that's where I think that it becomes really important. Anyways, so that's to answer your question. I know I'm kind of rambling here, but momentum is identifiable through breakouts, opening drives, because you have the most volume happening on the open. Usually it's off a fresh catalyst as well. And then just making sure your sell rules are aligned with the expectation of the trade. So, like this one, you would be risking $1, and this doesn't 5 bar trail until here, 358. So almost $4, almost 1 to 4 risk reward. And so imagine you take a $10,000 position on options. Say you're risking 10, 20%, $2,000. These went over 100%. So you're making you probably sell a little bit on the way, but you make 5, 10, maybe more $1,000 risking $1,000 or $2,000. But yeah, Paul, the one thing I would say is the size of the catalyst matters, and the technical big picture matters too. And what I would encourage you to do, and this is something I've encouraged a lot of people in the mentorship to do, is get the reps with this. Like these concepts become ingrained when you actually practice them. So like if you're not at that point where you're like, I have no idea what the expectation of this trade should be, make a note of it. Be like, I'm taking this trade. This is, my risk reward, whatever. But make a note, jot a note down that I think this will trend all day. Even if you don't follow those like perfect sell rules or whatever, exercising that muscle is going to help build your pattern recognition and improve that positive feedback loop, right? So once you start to watch enough price action and put enough plays on, then it becomes a little bit more second nature. But whether that's DMing me like, hey, I took this trade, and I think it's momentum, and then it trended all day, or it failed. What do you think? Like that's a good habit to be in, and also that's part of the point of the community. Like make sure you're leveraging the community and asking a lot of questions and just throwing stuff out there. Too many people hold back thoughts and comments, and it doesn't do anybody any good. So, let's see some questions. I'm gonna take a quick pause and go grab a drink. I'll be right back. All right, I'm back. I guess I should probably pay attention to what the market's doing, huh? MU is starting to sell here. These put spreads are not looking good. Let's look at our positioning. Yeah, so I mean, if I could see, that'd be cool. Say 425. This is a pretty important area to hold. If we don't hold here, then 7,400 might pull us. All right. Let's see other questions. Let me know. Just like I said, goals. I wanted to review MU and talk about that bigger picture rotation idea that played out well. Also, just highlight the fact that the group killed it this week. I mean, you can see the performance from this week has been really good. Some big trades, some trades I didn't even see yet today. TC caught the MU put with me, and that's what I'm talking about. I don't know if he actually was listening to me or just being awesome as he is on his own. 500% yesterday on SBX 7485 puts. Mr. Monkey. He's the SBX god. I think there was like, including roll ups and smaller trades and everything, like maybe 15 L's, and like 5 of them were like break even or small. And then there's like, I think 30 plus winners or more. Probably more based on what I'm seeing here. For a low volume holiday week, trading both upside and downside, I'm very proud of the group. Did a good job this week. Spread is getting kind of melted. Should I sell MU or hold MU? We've got the 950 puts as a roll up. They're totally free. Isn't it tough to focus on so many trades? Well, if you're trying to take all the trades, then yeah, I would say so. But as you see, like I take like 1 trade a day, 2 sometimes. So if your question specifically with the group, I think this is a much broader point that our goal has never been to just, promote copying blindly or just like blindly following an alert. Our goal has always been centered around education on what the heck we're actually doing. And different traders in our group have a little bit different flavors and styles of trading. Like Space Monkey's really good scalping and momentum trading. I would say my strength is like bigger picture ideas. I can hold, all day, and whether I'm right or wrong. Sarang's kind of a filtered clone version of me. J Money's got futures in S&P down, which you can certainly trade SPX off of the analysis. TC's good scalping. BDORTS trades the strat. IV's looking at all the data, the dealer positioning in the market. I would say more of an idea trader, a little bit more similar to me in that regard. So we got a lot of different, views or kind of skills brought together. And the goal would be to, because everyone has a little bit of a different personality too. Like some people they prefer to scalp. Some people prefer to swing trade or trade the idea. So in terms of the alerts, like the goal would be to understand the reasoning behind them. And if you're unsure, just ask, send me a DM and we can talk about it. But I mean, for me, I've kind of learned to do less, but again, everyone's different. I mean, what works for me doesn't have to work for everybody. I am in a stage in my trading where I have a little bit of a higher priority on mental fatigue and trying to do less, because I believe that the real money is made on like 2% of the trades of the year. And so I need to be mentally sharp for catching those bigger opportunities. I mean, even this year, the bulk of my P&L is from like 5 trades. Um, so I view the routine everyday stuff as take it or leave it. It's reps that I don't necessarily need all the time, but can be good to keep the muscle there. It's kind of literally, it's kind of like working out. It's like if you're kind of maintaining, and then once a month you might try to push yourself a little harder to max out. I don't know if we have the exact entry times and exit times. We used to. I mean, we store all the data, all the alert data in the database. John might be able to speak more to that. I know we have this.
Yes. So in the all alerts channel, all the dates. You're talking about the every entry and exit.
I think that's what they're asking.
Yeah. So it's in the all alerts channel now. Like every single timestamp is included, and every single analyst too now, with the way that all the alerts are formatted, have that. So see, it says today at whatever time on the bottom as well. So like even if there's multiple messages back to back, always in the footer of the message it says the time. So that was always a concern before, when they would be stacked. Say J Money entered and exited like quickly, you wouldn't necessarily see the exit timestamp there. Hopefully that answers. I'm just chiming in. I'm just fixing
Yeah, I
things.
think they're looking for like a report, but honestly, what I would say, Abby, is like, you can DM me if you want. If there's something specific that you're like looking for to gather from that, we can talk about it. But I would say the broader point is the overall performance speaks
You can
for
go to the
itself.
month
If there's
too.
a
You can go month.
specific trade that you want to look at, like you can go back and look at this, the timing of it. But
And on the performance page too, just to also note, there is like a by month view. Scroll down as well. So pick a month, so you can kind of see the top trades from each month respectfully, and the stats, kind of the things that happen. So hopefully this gives people enough visibility. Yeah.
Where are the losers at? Where are the losers at, John?
I mean, there are no losers.
We only win. Yeah, this is cool too. Yeah, like he was just saying, there's the winning and losing comparison.
Sir,
looks great. Looks great.
And there's one specifically also for J Money too, / futures instead of performance, so you can
/ futures.
So here's all J Money's.
Nobody's got John. That's what I gotta say about TWI.
Yeah.
We got every page you want. So
you guys want more pages? I'll give you more pages. You get a page. You get a page.
I think every member should have their own page of performance. Oh wait, we have the journal. There's that too.
Yep. might as well show that. I mean, that's a pretty. I mean, if anyone's looking
Yeah.
for a free journal, Nick put a ton of work into this. I got to touch, get some work into it too. Pretty incredible. Yeah, for everyone to have
Yeah.
access to a tool like this.
Absolutely. Excuse me. Yeah, it's cool. This is free, guys. So like, if you're paying for a journal, stop paying for one. You can just import your trades on our free journal, and it's amazing. Mine's a little outdated. I need to. I'm exposing myself as I haven't uploaded since June 26th.
How dare you not journal your trades? Have you read the onboarding docs today?
I'm getting myself in trouble here. Yeah, it's great. It's great. It's great. It's great. Go MU, go. Aye. MU is
938.
paying us. We are. What'd you say?
938 is -1, right?
Yeah. Yep. It is. I have a level here at 960, so I think I'm gonna lock it. And what the heck? I'll do it on here. People can see what we do. We can roll again. Can always roll. No losing trades this week allowed. That's the wrong. It's the wrong. It's the wrong thing, John. Ah, shoot. Okay, whatever. I don't have time. It was like 70% or something, and it's still flying here. It's over 6 now, guys. Clear. It's craziness. There's no like downside to me showing this, right, John?
No.
Okay. Just making sure.
I mean, since you suck at typing today and using it,
yeah,
it's probably the downside.
Right. It's like,
Yeah, besides that, your competency. I'm just kidding.
yeah. Thanks. Let's see if we get a reaction at this spot. Guys, my put spread's getting toasted right now. Why are we not? Where's J Money? Why are we not bouncing in support of Charm right now? 7,400. If this gamma flip doesn't hold at 27, 28, this is a spot here that needs to hold. Otherwise, straight to 7,400 we go. So you heard it here first. This is a spot to hold. It's like 28, 7,428. So the reason for that, anyone that's new, is the gamma profile is positive right now. It would be flipping into negative, which would mean that dealers start to move with the price instead of hedging against it. So it can essentially just can accelerate movement. So we'll see what happens. I need to update my chain. I know there's some more questions in the thing, so I'll look at that here in a sec. Force. Oh, what the heck? All right. Apparently I'm mentally ill. Okay. There we go. So if this holds, I would look for a bounce back to 50, 74.50. Looking at another put spread to try and offset the one underwater for this area here. This area I can hold. 1.0. Team 10. All right, I just put a 74 15 10 put spread on. See if this spot can hold. If not, then we lose. All right, other questions. Trying to find them. The positioning is still the same, but like I said, we're trying to hold from flipping into negative gamma. I mean, it's still light positive, so, but it's positive, and we have supportive charm, so we'll see. What you'd want to see here is a push back to 50 to the peak. Yeah, it's fairly light, so you can expect a little bit more volatility in the range. Let's see. Do you look for Marvell to fill the gap below, or how do you think about that? Yeah, I mean, it started to enter the gap, right? I don't honestly, gap trades to me, it's just like it's just one point in the broader picture of things. Like, if there's a list of like 5 things, it's just one of them to me. To me, it's not a strategy. Personally, I can, not that it can't not work or something, but yeah, I mean, that's what it's doing. So it's filling the gap to 225. I would look at the EMAs and just kind of, call out that it's doing everything I was talking about with the MU trade and thesis is applicable here. It's the same category. Shorter term moving average is pointing down. One thing about Marvell, I would say it's interesting here is that the gap fill is right at the 50-day. So 225 is right where the 50 days at. So that's pretty interesting. So we'll see. Maybe look for like a back test at 5240 next week and turn lower, unless it just gaps down. Yeah, I don't really see a trade, but yeah, I mean, to answer your question, it's a gap fill setup. Question on viewing entering into an opposite position, for example, entering a condor on a position that are in the positive to hedge and wait out theta. It depends on the environment for me. I'm not, I haven't put on that many condors. I've done a few recently. It totally depends on the context. I think I wouldn't do that in response to just because of the position being up or down. I think that's even taking, how you exit any trade, I don't think should be entirely based off of what the P&L should be. It should be relative to the setup and the price action first. So to answer your question, it's completely contextual. Because it'll depend on the profile. If there's, high gamma environment, you test the bottom end of the range and start to trend back higher. And then you're testing some resistance and you throw a call spread on when you already had a put spread on and throw a condor on, then that makes sense. But I wouldn't do it as a reaction to the P&L. If a trade's not working, just get out of it. Or if you've risked, properly, then it just is a loss. It's what it is. Is it a good idea to choose only a few stocks to trade? I would, short answer, no. But to me, and I think a lot of traders start out that way, where it's like, there was a period where it's like, okay, you just trade Amazon every day because it just went up every day. MU, SNDK kind of became that in some ways. I think redirecting that simplicity or focus that you're looking for should be on trading the stocks that are in play. And again, within the context of day trading, you should trade what's moving. And sometimes certain stocks consistently stay moving for a while, you can stick with them, and that's fine. And there are certain behavioral patterns on individual names that is true. And so like learning how they trade can be helpful. But I think it's more important to be good at stock selection in general. So it's more of like going into the day. If you're looking for simplicity, it should be revolving around like what's in play and what's moving. Well, it has more odds to trade outside of its general ATR than a normal stock on a normal day, because you're just increasing your odds fundamentally if you trade a stock that's trading high volume or more volume than normal. So improving the skill of trading the right stocks is more important than learning like the behavior of one specific stock. Because if you think about it, you're just competing. Like if you think that you can learn a stock better than a machine, then you're fooling yourself. At least I think, because that's ultimately what things have gotten to. So if you're trading Meta every day on 0.5 RVOL, like you can have some wins in there, but over 100 or 200 trades, I would bet on the house over you, because you might even have 90 trades out of 100 really good, but then you tilt on like 5 and throw away all the gains. So it's just my perspective on it. But I used to do that. So I used to like only trade Amazon. Ironically, MU was one of them when it was like a $40 stock, like a long time ago. I like to trade Amazon, Tesla, I mean, you could trade the Mag 7. There was a period of time where it's like you could trade the Mag 7 names forever. And like if you still tried to do that and you've missed all the MU and SNDKs and simi moves, then you didn't really do that well. Because if you look at the Mag 7 dailies now compared to what they used to, right now MU and all those trades look like they used to, right? Like it's like you want to be trading PLTR when it's making this move. And that's what creates bag holders too, by the way. It's like people get kind of married to certain names. Like people would trade PLTR every day from, whatever date this is. I don't know, April 2025 to August 2025. And it's like, yeah, you could do pretty well. But then when it turns into this, it's like you're getting smoked. So it's more about what's in play and what cycle the stock is in. I think that matters. All right, the market's just melting right now. What's going on? Testing that gamma flip here. Might have to close that put spread or hedge with puts. Time is it? 2? Okay. So, let's see, check in on MU. Other questions? Other questions? Usually focus on 4 tickers max per day, but wondering if you get to set alerts on other tickers. And if so, do you place that alert on where you would enter or at certain price where it is worth to watch? Otherwise, do not open the chart at all. It's a good question. Yeah, I can. If it's overwhelming to you to watch too many names at once, then there's something wrong with that. What I would say is exactly what you suggested, is being consistent and setting alerts. Like when you do your homework, on setups that you like, focusing on. I usually watch a main grid. For me, it depends. So depending on what setup I'm at as far as my desk, sometimes I'll have a grid of like 20 stocks up that I'm interested in, just kind of like peeking at the price action. So I'm like seeing the board. But I think it's a great solution to do your homework on the setups, boil it down, to 5 or 10 names that look good to you, set alerts on all but the 2 or 3 that you want to focus on more closely, and then you just flip to the chart whenever it, hits an alert. I think that's a great way to stay focused and not increase your mental fatigue. Trading view alerts are great. I mean, I would say I'd use trading view alerts all the time. Could you briefly explain the look above and fail for SPX today? Yeah, let's see. Is J Money here? No. Yeah, I think that was a good trade. I was not here for the first half of the session. But when you look at the daily on SPX, right, we've got this trend line that we've been talking about. And it, exactly like you said, it's a look above and fail. So, I think what's interesting is you have a pretty big move up from the lows. You attempted to break it yesterday and failed. Then you get through today. So this is one of those things where you don't necessarily need to have the thesis ahead of time that a look above and fail could play out. But you can know going into a holiday weekend, you've made a really big move in a short period of time, that if it does fail and turn and put in a signal, that you could reasonably participate. Now, what I would say, I need to probably look back. Let me look back a little earlier in the session on the profile that we had. Okay, so we had light positive gamma and supportive charms. So honestly, I mean, J Money might have better thoughts on this than me. Normally, this is a trend environment. The only thing I would say is it became fairly light around 7,500, and it looks like it probably shifted from a supportive to a suppressive environment. Let me see. So it wouldn't be my first choice to see this just trend lower all day. That wouldn't have been. You can kind of see the dealer positioning changing. It got really thin. Yeah, from a positioning standpoint, and again, I would say J Money is probably the strongest read on it than compared to me. But knowing our playbook, it wouldn't have been my first pick to see us just trend lower. But technically, it's easy. Technically speaking, it's exactly what you said. So with any trade, you have the thesis. Okay, you see it broke out and then failed. It's like, okay, well, where's your identifiable entries? You got your opening print lows. You have the back test and turn as well, which kind of lined up with that opening print low break. And then it's just trended into the range. So your main targets would be structure of the range, which is right where we're at now. So we have some dealer positioning here as well as technical support. So we're getting a bit of a reaction now. You'd also have this spot here to watch for a reaction. Yeah, I don't have a whole lot else to say, Lake B. I mean, this is a good one to add to your archive. We could probably try to talk about a little bit more, but I wouldn't say it was as clean from a gamma playbook perspective, if I'm being real. MU got the follow-up red day, but Meta did not. Can you explain how to catch these? Meta is red today. Maybe I don't understand what you're saying exactly. You mean like follow through in the same direction as MU was obviously down yesterday and then continued down. Meta was up today and then did not continue up. Is that what you're saying? Okay, cool. Yeah, so the way I think about this is there are stocks in play and then ways to get involved in them. And so a stock in play that has a catalyst doesn't always mean you don't need to know the direction. And this is where having good stock selection becomes so important. These put spreads are paying, so it's a little bit of a hedge against the one that's underwater. So like I said, I'm looking for a move up to 50. Sorry, I'll come back to the question in a second. This is that move that we were just talking about. We got the reaction. Now look for a push into the peak. See if we can get there. It's a pretty supportive environment. You would think that it would. But today has not really gone exactly how I would have thought based on what we were seeing.
But then also note QQQ is at -1 right now.
Is
Could
it?
be,
Okay.
yeah, could be a bounce spot. It's reclaimed -1 so far.
Okay. Yeah, good call. I'm gonna try to get filled these put spreads at 50. See if I can get. Okay, I got closed out quick there, everybody. I'm gonna try to alert it. I was trying to make sure I got out. Just calling it out. I'm out at 50. Yeah. Okay. All right. So the reason I close that out so quickly, even though it's still working and probably works really good, this is kind of a hedge against the one that was underwater a bit. That one's the 45-40 put spread. So that one's actually looking much better at the moment. We got 2 hours left, so I would want to see this area continue to hold, even if we chop around within it. It's okay. If we reclaim the peak, we're reclaiming into a more suppressive environment. So I'd be careful with longs. This is not generally what I would look for longs into the end of the day. So stranger things have happened, but it's not as textbook as you'd want. What question was I answering? Oh, the meta thing. Yeah. So what this is it's a day two fade, right? So do you have day one setups and day two setups? Just because the direction on day one was one direction does not mean that it has to play out, or it's a playbook if it plays in the other direction. You have to let price lead first. Now there's nuances to it that you could, look at that might give you a stronger inclination that one setup favors a day two fade more than, a continuation. So a couple of considerations for you on meta that are strong that would, make me hesitant on the upside, and that's why I didn't include it in the watch list, is the close. So yesterday's close, it obviously made a really really nice move, and then it closed in the bottom, kind of the middle of the range, I would say, right? So it's fairly neutral, but the strongest continuation trade. So anytime you're comparing something, you want to ask yourself, well, what is the best example of a day two continuation? Well, best example of a day two continuation would be a close on the highs would be best, or at least in the top 20% of the day's range. That's a strong sign that buyers stay in control and you'll get follow through the next day. Then there's other things to consider. Meta specifically, look at the bigger picture on this. When I hide these levels for a second, like when you look at this chart, like just take a step back, it's like a complete mess, right? Like it's basically just in a massive choppy range. It's like that's technically a complete mess. A lot of times, and I think AV played out like this on day one. So we talked about this. I had a 30% move on earnings, and I was calling out, be careful with opening drives on this because it's basically become a bit of a not a bag holder stock. I mean, stock's still a good stock, but it is sort of bag holder from what it did before, right? Like it was obviously went a bit more parabolic. Okay, so the point being, it's been in a downtrend, right? So when you get a strong pop in a downtrend, the odds that you have people trying, maybe salvage some of their position, or it's just an opportunity to get out, it's harder to see follow through unless the catalyst is super strong. If it's strong enough, then sometimes it just doesn't matter. But in the case of meta, you're gapping up into a crap range, for lack of better ways of putting it, technically. So it doesn't mean it couldn't have seen continuation or whatever. We don't need to know, right? We're trying to break things down and view, like figure out, improve our odds. So there's never certainty, but everything that we do is trying to improve our odds, right? And so these are things to consider. The other thing I would say is the market. So when the market's starting to fade, like if you're looking for longs, like first of all, you've got your day two setup. All right. So stock was in play yesterday. You got a catalyst, day two. All right. So what types of trades are you looking at on day two? For my playbook, day two can mean a couple different things. I'm just going to delete all these levels because I just don't care about meta. You've got prior day high break, prior day low break are two the most basic ones, right? So your day two is the kind of the formation, for lack of better ways of putting it, and then the trade is like the play that you're running. That's how I think about it. So it's in play. I had a catalyst yesterday. All right, now it's day two. How do I want to get involved? So day two has a couple different entries. Prior day low, prior day high are the most basic. Sometimes I'll look at like the EMAs um, and look for more of like a trend move or something like that. In this case, you got a signal. So you're asking yourself, well, what's the signal? Well, day two fade would signal under prior day low, which happens here. You even got a really nice back test, right? So and a nice entry below. A lot of times continuation trades are very trendy in nature, which is also what you're getting here. Um, pair that with a look above and fail in the market, and you got yourself a pretty nice day two trade. So you can go into this day like, I want to look for a rotation through the range back up to the prior day high. That's certainly a trade, right? So you could say, if you put the 921 EMAs on, go to RTH, go to 10, 15, so 10 minutes, fine. Let's actually look at 30. I'm curious. Okay. Well, usually I'll look at like 10 or 15 on like that rotational trade. So say this opens up, right? And starts to push higher. Like, so you can see that this started to react to the 921 into the close yesterday. So you could go into the day with a bias to the upside and say, hey, I think the market's strong. The market's going to break out. That's my thesis. Meta had a catalyst yesterday, gave some back into the close, but I think it's going to traverse back higher through the range, right? That's a thesis. So you're looking for this like reaction and push higher. But there's no signal. This is what I was talking about earlier. What is the trade? A trade isn't just a thesis or an opinion. It's a thesis or an opinion with a signal. And then with that signal should by default come with some level of execution that you can repeat over and over again. So in this scenario, it's okay to have the idea that I just gave you two really concrete, nuances on the higher time frame why upside wasn't really great, but say that you don't, or you have some other reason that you think the upside would be in play. That's fine to have a thesis, but where's the signal, right? Like you shouldn't be going long anywhere on this chart. Like there's no signal long, right? So then it's like you see it sell back to the prior day low, and you're like, okay, well, what's price doing? Price leads. Price is what should be your signal. Price is telling you, it's giving you real information in real time that this is not a trade to the upside. So you shouldn't just be guessing at the upside. You should react to what price is telling you. Price is king in that regard. And so price sells to the prior day low, and you can be like, okay, I'm looking at a fade, market look above and fail. You're reacting in real time. Maybe you're putting all this together and don't really want to chase the entry, but then you see this back test and rejection. You're like, okay, I'm going to get short there, risk the prior bar, or risk against like the EMAs or something and ride it lower. That would be how I would approach meta today. So a little bit beyond, I would say, what you asked, but touche. Same thing happened with AMD. Thought of it. So yeah, it's again. So for you, like this is great. This is like what every trader kind of goes through. It's great to have a thesis, but so many traders have an idea or a thesis on like what will happen, but then trade that thesis. Don't trade the thesis. Unless if you're swing trading and all that, I would still argue having some technicals behind it is a good thing. Everything I'm saying is very contextual to day trading, and I'm very confident in this fact because it's been something that's really helped my trading. You can have a thesis all day, but don't risk money on an idea unless it's like with profits or like you're rolling up or something like that. But a true trade with size that matters and is meaningful. It's one thing to have a thesis, an idea, but it's meaningless if price doesn't validate it, right? So you want to have some kind of signal. You have to add that element to the trading. You have to have a signal, and there's a lot of reasons for that. A lot of them are psychological, but more importantly, it actually comes back to data. Like if you're repeating the same thing or doing something that's quantifiable, like a signal, like okay, this is a prior day low break, or this is a breakout entry signal, or this is an EMA backtest signal, whatever it is, doesn't matter. If you can name it, then you can track it. And if you can track it, then you can build good data. And if you have good data, then you can make informed decisions about your business and put your money where you're doing well and pull back your risk where you're not doing well, right? You can only get to that result if you're doing, like that process. Give us 7,500 for America. No, we don't want. Oh yeah, we do. We do want 7,500. I had to make sure I agreed with that price. We need this put spread to work. Some good questions from the group. Thank you all for contributing. It's been real. I'm really behind in the admin chat. Screw up, John. I don't want the access, actually. Just don't give it to me.
You haven't opened up your okay, great. Just panic attack.
No. Yeah, no.
Can't be showing everyone Nick's toes on stream.
Yeah. Nobody wants to see Nick's toes. Or maybe they do. I don't know.
Let's find out.
Somebody asked what if NVIDIA is bottomed or not. Let's see what NVIDIA looks like. So, well, I don't know, but I don't need to know to make money. That's always a good point to make. But shorter term moving averages are pointing down. It's still holding the 200 day. I'm really curious to see how this plays out over the next couple of weeks because, like I mentioned before, we had the quarter end stuff in beginning. But does it turn into a bigger theme? If you start to get NVIDIA below the 200 day, MU pullback, memory pullback, SNDK, like this is a big sell on SNDK, right? Almost to the 50. And to me, this is just like restructuring the trade. And what I was talking about where people get married to certain stocks, this is the type of restructuring technically that just starts to kill traders because for whatever reason, continue to expect the way it behaved before to just keep playing out when it's literally different now. Like it's okay that it's different. Something else will do this. Anyway, I don't even remember what the question was. NVIDIA, I don't know. It's like, I mean, the market's still bullish, right? Like even if we corrected another like 5 or 10% or something, the market still looks great. NVIDIA is basically a value play now. It doesn't move, it's slow. It's a dinosaur because it's so large, but I would just look if it's holding above the 200 day, then it's like a great place to buy it, right? It's below its shorter term moving averages, so be careful, trading it. I wouldn't look to really trade it, but if you like the name and you're looking to invest in it, something to consider for sure above the 200 day. Watch, I say it anytime I talk like that about a stock, the next week it's probably gonna be up like 10%. So hold up market.
What
See how we
spread
went
you
straight
got
to the peak?
right now open?
I have a 45-40 put spread open. So I have a real knack for just getting it real close to the wire. It's just like kind of there's been so many times, John, that I've had spreads be like literally within cents from expiry. So yeah, it's a really bad skill to have. If you guys are new and don't know anything about spreads, you can ask questions. But it started a small account to only trade spreads in. It's gone pretty well so far. Had one losing trade. I think we've taken 5 now, including the ones that are open. I view that as like cash flow. It's not like I don't really try to be aggressive at all. I just trade the gamma playbook. It's up 12% or so. We started it on the 25th of June. See if we can keep it rolling here today. Time is it? 2:30. If I haven't answered a DM, I'll get to it today, guys. I'm a little bit behind. Just letting you know. J Money, Space Monkey are out. It's just us. I'm gonna plan to do a little live Q&A with the accelerator group tomorrow around market open, sometime in the morning tomorrow. If you guys are not in the accelerator and want to have one-on-one help with your trading, just send me a message. I can give you the details on that. Abby really wants the documentation on past alerts. Just start, Abby B, just start a DM with me. DM me first. It's because there's so many stupid impersonators out there. It's TWI_Mate. I don't think we have like a export. I'm not gonna give you like an export of every single timestamp of every trade. But I can help answer questions and give you a good idea of some things. Can you review the indicators of what you're using in TradingView? Yeah, for me it's really simple. So never been a big indicator guy, but I found a reason to use certain ones nowadays. So ATR, so we use SATI ATR for a couple different purposes. The general purpose for me is just knowing what a stock's typical range is, right? So like MU typically moves 95 points a day on average over a 14-day period. So this is just SATI ATR. And that can be helpful because, if a stock's trading higher volume than normal, it can kind of help you get a better idea of whether or not it's more or less likely to trade outside of that range. But then it can also, this indicator specifically can give you, it gives you the -1 and +1 fib extensions off of the ATR, and those are really powerful actually. So from a target perspective or managing risk in a trade, can be really good. Like was this yesterday? No, I don't know what day this was. Monday, June 29th, whatever, it doesn't matter. This was -1 ATR, right? MU sold aggressively into it, bounced off of that and recovered like 100 points plus. So it can be really good for targets. That's why I was mentioning earlier, John and I were talking about -1 on MU being down here at 936 on the session. That's just an extension of the ATR on a session. So they can be really good targets. I use relative volume at time as well. So relative volume at time in conjunction with ATR is really powerful because um, it just tells you how the relative volume over a 21-day period, which is the average trading days in a month. So it can give you an idea very quickly if there's more stock, if there's more market participation in a specific name. So this is the easiest way to improve your stock selection. It's more nuanced than that, but generally speaking, you want to trade names with high RVOL, right? Because they're more likely to make bigger moves and they're more likely to move outside their typical ATR. You're just helping your odds. You're fundamentally improving your odds of making money by trading a stock that's going to move more. And then EMAs is the only other thing I would say I use. I use the EMA clouds, so the Ripster clouds, Ripster EMA clouds. I use 921 3450. Also, yeah, I know the market's closed tomorrow, but I'm just that just happens to be around the time that we're meeting, by the way, coincidentally. So these during RTH session can be really good for a couple different reasons. It can be really good for staying in a trade that you expect it to trend all day on. And it can also be good for certain types of entries. If you struggle with identifying the trend in a certain stock, EMAs are a great way to visualize it. So, you know, like if you traded Tesla on this breakout, you could say, okay, I'm going to hold a core position and trail the 921 EMA. And, you know, with this, in this case, you wouldn't have sold until 9% higher, right? Or maybe you held into the open and then sold, you know, catch a 30-point move. And like I said, there's entries in my playbook around this too, but I won't get into that at the moment. Thanks for sending me a DM, Abby. Be in touch. I'm a little behind just for what it's worth, just so you know if I'm a little slow to respond. But I will respond. Kartik wants to know what the full port. GME. See what's up with the kitty these days. Hey, it's actually up. Now you have to, Kartik. So you asked. I gave you an answer. Kartik is an OG. What is today? Is today Thursday? Okay. I know I'm sharing this right now. I'm trying to do is not totally hold on, let me just do this. Okay, so if you guys are unfamiliar with the accelerator program, it's not just your like regular old mentorship. It's kind of a culmination of years of a vision that we've had. It's still evolving too. It's only going to get better. But the cool thing is we have our own portal. So this is built from the ground up. This is not like, you know, some janky thing. John built this entire thing to support our vision for how a mentorship should go. So you can literally, you'll be able to, you log in, you have an inbox, you can message me directly. You have the education, so the course. So Space Monkey put together over 300, it's over 300 pages of content that he's actually been working on for years that we turned into a course and video content for you all.
Pop into the theater mode for a second so everyone can see all the videos. I don't have the total amount of hours of video go to another slide, I guess, that has like him talking and stuff. So yeah, this is all an actual pretty incredible production. Space Monkey recorded hours of content overlaying this incredible PDF as well, and all the education. So we have a quiz component as well after each major section, and it's a great starting point into the accelerator to getting you in the right mindset. And again, probably a lot of things people know, but it's always a great refresher to really see the culmination of Space Monkey's life work with Matei's insights and everything all compiled into one package.
Yeah. Yeah, absolutely. It's a lot of work went into it. So there's basic elements, and then there's more advanced concepts. There's the whole playbook, right? So there's a lot that went into this. So there's the accelerator includes the education, and then on top of that, you're getting literally one-on-one help with your trade. So this is just somebody that's in the group. You can see the messaging and all of that. And then the journal is like your HQ. Like the goal is for it to be like your HQ for trading. You have your results, and then you can have your customized trading rules and systems that we work with on that with you directly. And the cool thing is once you log a trade, you can open it. This one's already being reviewed by me and her, but you can hit share with mentor, and that will share with me, and I get it in my inbox, and we can talk about it. So it's pretty cool. So I would call that out. If you guys are interested that haven't heard about it, just send me a DM or DM us on the X account, whatever, wherever you're listening. Get back to S&P because this spread is now in the money. So considering that we are surviving, I just want to look at the positioning here. I don't like where it's at, to be honest. So I'm going to look to close it. Don't really want to risk it. Why are you not working, Robin? Oh, that's why. I got filled at 110 here on the spread amount. Closing it. I don't want it to get dicey, guys. I just want to end the week strong. Close. Put credit spread. SPX 74. All out, and it's still doing its thing. So you're just seeing this. You'll get a better entry or exit, I should say. I don't DOS myself here, but let me pull this up. All right, here's our Robinhood account. The spreads account. Robinhood's crazy, man. You can open up like a new account so easily within this, but so yeah, just for trading 1 to 3 contracts to start with the spreads, and we are what are we up today? 190 now, so that's good. I think we've had one loss. I took a loss yesterday, and believe 5 wins so far. So this is cash flow, and just trying to show you all that might have smaller accounts that are interested in Gamma or just trading a little bit more passively, what you can do with having this data. I mean, I can't say it enough. Having options depth is the only reason I'm even doing this. That's the only reason because I know that there's edge in it. I used to trade spreads more in the past, but the issue was the fat tail risk. And what I mean by that is you might have a super high win rate, but then there would be like, a handful of trades that wipe out so much of the profits. And that still can happen. But the thing is that options depth solves is not only an improved win rate, but timing. So like because we can actually see the positioning, you can make way better informed decisions. And then build a business around it. So I've been doing that for a while. I've had some really good success with spreads since I started getting a little bit more aggressive with it in April, I think, maybe March. Anyways, yeah. So slow and steady here. I'm posting all of this in the group under spreads here. So that's it. That's it. Just update this. I'm gonna be done with. I'm not gonna do anymore. End the week. Post a picture. move on with my life. Let me get it. Ask my assistant Claudia to give me a printout of the performance here. Do I always keep them 5 wide on the spreads? Do you ever go further out? That's a good question, Chucky. I have in the past. I haven't lately. And it's funny you ask because I've started to consider doing that. I don't have much to say on it. I mean, I think you might see me do that from time to time. Maybe it depends on the positioning a little bit, but when the account gets a little bigger, I'll probably do it more. But I don't have a problem with the 5 wides. It's generally fine. I did it's been a long time, so my memory's a little foggy on it, but I did some sort of analysis on that before, and the return skew is better on the 5 wides. I can't remember why, but I just remember that I did look at that, and it seemed like it was better. I could be imagining things, but I'm pretty sure that's real life. No, our S&P analysis is included in the TWI Pro. But if you want the actual program for yourself, we have a bundle. So there's this bundle here that if you want, so their subscription, you can kind of see their subscription, like to get access to this platform that I'm sharing is $250 a month. So obviously combined, it would be a lot with TWI Pro. So we have a bundle if you want access to both, and so I can drop that in the chat. But
I just got to update the link, actually, as you're well aware. Yeah, so
yeah,
let me do that
I'm
now.
gonna just
Thanks for the
delete
reminder.
that. So you put whatever in there whenever.
Yep.
But we do have a bundle, so that's a thing. The cool thing about this is it's not just like an affiliation, and I say that because I'm pretty proud to be like direct integrated partners with Option Stuff. So we know the crew well. We've been friendly with them for well over a year now. So on their product, you can actually pull in a live feed here and customize the feed of TWI. So if you want to see, if you want to customize this to see only SBX trades, from Monkey and all of us, whatever. Where do I save? Apply. Okay, so then you can have this feed of SBX. So you can be watching and learning, seeing the profile, and then seeing the trades that go off. All on here. So this is an integration more than just a partnership, and we have a bundle for it if you want it. To add to that, though, like all the analysis you see in TWI Pro, so like in commentary, right? We were talking about the in the morning watch list and all that. It's based off of this data. So it just depends on how much you want to get to know it and use it, if that's right for you or not.